Hello dear students, welcome to Devika's Commerce and Management Academy. One short problem, basic problem related to holding companies will see. Just to get an understanding. A simple problem I've taken. The problem is given here, problem is also on the board. They are saying that from the following information, prepare consolidated balance sheet as on 31st December 2010. Information is very less information is given, so need not to follow the format of balance sheet as per the company accounts format, not required, because very less information is there. Whatever is there, that we will take it out and will post it in the consolidated balance sheet. What is given to us on the asset side? Fixed assets. I told you current assets, fixed assets and current liability. These three things simply add up and write it on the consolidated balance sheet. Now fixed assets are 25 lakh and 12 lakh. Both will add and will show it in the consolidated balance sheet under the assets column. Now here investment is 10 lakh. Investment is 10 lakh. Whose investment? H limited investment. H limited means holding company. S limited is subsidiary company. Both the companies' balance sheets are given. H limited is investing 10 lakh rupees on subsidiary company. Investment we are not supposed to take. I told you two items we are not supposed to take. One is share capital of subsidiary company. Second one is investment of the holding company. These two we are not supposed to take in the consolidated balance sheet. So this ignore. Okay. Now coming to the balance sheet. Balance sheet share capital is given. Share capital of holding company and subsidiary company. Holding company is okay. We can take in the balance sheet. Consolidated balance sheet will take this one. But share capital of subsidiary company, this we are not going to take. Why we are not going to take? Because this is already purchased. No, need not to take. Both we are going to compare. According to that you will be getting either the general reserve, capital reserve or goodwill, something we are going to get. That we are going to consider. Directly we won't consider share capital of the subsidiary company or investment of the holding company. Both we are not going to consider, but the difference we are going to consider it into the consolidated balance sheet. Okay. So here 20 lakh we are going to take, but this one not directly into the consolidated balance sheet. Second one is liability. Simple liabilities are given. This will add up and will show it. Okay. Now already prepared the format. Consolidated balance sheet of both the companies, right, together. So consolidated balance sheet of holding company limited and S limited, that is subsidiary company limited, as on 31st December 2010. Format is simple. First we'll write equity and liabilities. Under this what do we have? We have only share capital. First shareholders funds under this column will write now. So shareholders funds. Under shareholders funds we'll write two items only, share capital and reserves and surplus. Reserves and surplus is not given, so we have only share capital. Okay, share capital, how much it is? Share capital 20 lakh we are going to take. Each share is 10 rupees. Means how many shares are there? 20 lakh divided by 10. How many shares you are going to get? 20 lakh divided by 10. It means 2 lakh. 2 lakh shares. 2 lakh shares at the rate of 10 rupees. That is we are going to write. 2 lakh shares at the rate of 10 rupees per share. How much it is? Same one, 20 lakh will write. Next we have liabilities. Simply liabilities will add both together. Okay. Liabilities. It is 15 lakh plus 2 lakh. It comes to 17 lakh. We have nothing to write it on the liabilities. We have only two items. One is share capital and liabilities. So this we have written. Total up it is 37 lakh. This is total. Now next coming to the assets. Assets, we have non-current assets and current assets. Okay. Non-current assets, we have fixed assets. We'll keep the heading non-current assets. Fixed assets we have. What fixed assets are here? 25 lakh plus 12 lakh. It is 37 lakh. Investment we have, but we are not going to write investment of the holding company. We never write. So we have only one item. This one we have written directly. So total is both the sides 37 lakh. It got tallied. Important point to be remembered here. So share capital is here. Just roughly I am explaining. Share capital is 10 lakh rupees. Our investment is also 10 lakh rupees. Okay. So you can compare it like this. Or you can start with investment. Our investment. Whose investment? Holding companies. Holding companies investment is how much? 10 lakh rupee. We are investing 10 lakh rupees. Whereas the share capital is how much? Share capital of S company. Isn't it? S company, S limited. This is also 10 lakh rupees. So if you deduct it, this is nil. If you get some amount, it will be either goodwill or capital reserve. Isn't it? You suppose share capital is 10 lakh rupees. We are paying 11 lakh rupees. If it is 10 lakh and we are paying here 11 lakh. In such case, the difference will be 1 lakh. This is goodwill. Goodwill. Goodwill we would have written on the asset side. Intangible assets. This is tangible assets, fixed assets. Intangible assets we would have written. But now here in this problem, it is nil. Are you getting it? This is one case. If it is 11 lakh and 10 lakh, then we would have got 1 lakh rupees of goodwill. Goodwill we would have written on the asset side as intangible asset. Okay, this is one case. Let me show you another case. In another case, company's investment. Company's investment is suppose say 9 lakh. Investment is 9 lakh and share capital is here 10 lakh. Difference is here 1 lakh. Investment I am keeping the investment of 9 lakh, but whereas shares are 10 lakh. So this 1 lakh we say it as a capital reserve. Capital reserve will be showing on the liability side. This is liability and this will be asset, intangible asset, like we would have shown. But in this problem we are having nil, no goodwill, no capital reserve. Are you getting this? This both the amounts will be comparing to know either the goodwill or capital reserve, not for anything. Directly we are not supposed to take it in the consolidated balance sheet. This is the main important point you have to remember. The rest of the problem is normal, you can, because we have done final accounts, isn't it? Screenshot? Yes, take. Next class we'll see few more short problems. Stay connected, check out the playlist and practice well. Good luck.